I want to talk to you today about something that honestly nobody warned investors, including myself, about. And I'm seeing it every single day now in this market. 2025 just wrapped up as the worst year for the new condo sales in the GTA in over 45 years, not 10 or 20 or 30, 45 years. Since they started keeping records in 1981, we've never seen numbers this bad. And the first 2 months of 2026, it's been even worse than 2025. And here's the thing, condo investors right now are stuck in what I call a triple trap. They can't sell, they can't rent, and they cannot absolutely keep on holding. And today I'm going to break down exactly what happened, what the numbers look like right now in February 2026, and most importantly, what you should actually do if you're in this situation. Let's get into it. So let's go back in a few years, around 2019, 2020, and 2021. The condo market in Toronto was absolutely on fire. Interest rates were near zero, immigration was through the roof, and everybody and their cousins was buying pre-construction condos. And I get it, right? I even bought one too. At the time, it made sense. You put down a deposit, you wait 3 to 4 years for the thing to get built, and by the time it's done, the value is up. You rent it out, cash flow positive, beautiful. But here's what happened. By 2022, the Bank of Canada started hiking rates aggressively. Borrowing costs literally tripled, and at the same time, Ottawa started pulling back on immigration hard. So you've got investors who bought pre-construction at peak prices now closing on units in 2025 and 2026. They're completely in a different market now, a market where their mortgage payments went up, their rent income went down, and the unit that they paid $900,000 for it is now worth maybe $650,000. According to CIBC and Urban Nation research, back in 2023, already 77% of Toronto condo investors with new mortgages were losing money every single month. The average negative cash flow was $597 a month, and that was in 2023. It's gotten a lot worse since then. Okay, so let's talk about the rental side, because this is where it really starts to hurt. The whole strategy for most of these investors was, I'm gonna rent it out, the rent covers my costs, I hold long term, and over time property value goes up, and then I can sell later and everybody wins, right? That was the plan, except the rental market just completely fell apart. Here is why. For the few years, Toronto rental market was driven by massive immigration. Canada brought in 1.4 million newcomers in 2023 alone. A lot of them were students and temporary workers, and those people needed somewhere to live, so they rented. Rents went through the roof. Then Ottawa all of a sudden found out that they made a big mistake. They slashed immigration targets dramatically. International students' caps got cut, temporary residents started leaving, and by late 2025, population growth in this country dropped to the lowest level since 2020. And at the same time, all those condos that were bought in 2020 and 2021, they just got completed. Wave after wave of new units hitting the rental market all at once. Supply increased and demand collapsed, and we saw rents dropping by 8 to 10%. The Bank of Canada published a report in February 2026 saying 60% of the new condo units coming to the market are micro units and studio and small one bedrooms, but only 30% of the new households actually want those units. That's a massive mismatch. So what happened to rental rents? They dropped for 15 months in a row. Average asking rent across Canada fell. In Toronto specifically, one bedroom condo that was renting for $2,200 a year ago is now going for $1,900 a month. Downtown condos dropped even more. Some neighborhoods down over 11% year over year. All right, so you might be thinking, okay, if it's this bad, why don't just people sell and get out? That's exactly the problem. They can't sell either. Let me give you the sales number because they're unreal. In all of 2025, new condo sales in the GTA and Hamilton area total just 1,599 units. The entire year, that's a 60% drop from 2024 and 95% below what we're seeing in 2021. Urban Nation, who's been tracking this market since 81, says this is the worst they've seen it, worse than 1990s crash. rents going down, carrying costs going up. You can do the math. These investors are bleeding every single month. And Build, the Building Industry and Land Development Association, confirmed that 2025 was the weakest year for total new home sales since they started keeping records. 45 years of data, and nothing came close to how bad 2025 was. On the resale side, TREP data shows that overall condo apartment sales in the GTA in 2025 were down 14.7% from already weak 2024 numbers. The average condo price is now sitting all around 666,000, down about 5% in 1 year, and that's on top of the drop from 2022 and 2023. So here's the brutal situation an investor is in right now. Let's say you bought a pre-construction condo in 2021 for 900,000. You signed the contract, put down your deposit. Today the unit might be worth 650,000, maybe 700,000 if you're lucky. But you legally owe the developer 900,000. That's what the contract says. If you try to sell, you're not just losing money, you could lose your entire deposit and still owe more on top. And the banks, well, some banks try to use what they call blanket appraisal, which is appraising the unit based on the original purchase price so the deal could close. But that's getting harder and harder to justify in 2026 when prices are that far off. So it's really hard to sell and not own anymore. You have multiple options. Either sell at a huge loss and pay something on top or walk away, lawyer up and be ready for the developers coming after you for damages. So if you can sell, okay, fine, you hold, right? That's what everybody's saying. Just wait it out. Rates will drop, market will recover, except the holding strategy is killing people too. Because while you wait, you're burning cash every single month. Your mortgage payment went up when you renewed. Your maintenance fees keep going up 5, 6, 7, 8% a year in a lot of buildings. Property taxes haven't gone down either, and your rental income went down. Some investors are losing $1,500, $2,000 a month every month just to hold the unit. That's money out of their pocket, out of their savings, and out of their retirement fund. And then there is this special assessment. This is something a lot of people don't talk about. A lot of these buildings from 2010 are now aging. Elevators need replacing, parking garages need repairs, roofs need work, and if the condo corporation doesn't have enough money in the reserve fund, which many of them don't, well, then they hit every unit owner with the special assessment, and sometimes it's $10,000, $15,000 that you have no choice but to accept, and you have to pay. And on top of that, all that, Urbanation reported that about 10% of the pre-sold condos that closed in 2025, about 3,000 units, the buyers just couldn't close. They walk away or they defaulted. Some of those investors are now being sued by developer for breach of contract. Okay, to recap, you're in a negative cash flow every month. Your property value is down 25-30% from what you paid. You can't sell without taking massive loss, and you've got no idea when this turns around. That's the trap. Now, here's what's interesting about all of this, because this isn't just bad news for investors. This has bigger consequences for the whole city. In 2025, a record 28 condo projects were canceled in the GTA. That's more than double the cancellation from 2024. Developers are literally walking away from projects because the numbers don't work anymore. Condo construction starts have fallen 88% from their peak. 88%. We haven't seen construction this slow since the 1990s, where we had one of the biggest recessions in our history. And Urbanation is saying that by 2029, there will be virtually no new condo completion at all. So here's the irony. Right now, we have too much supply and not enough buyers. But in 3 or 4 years, because nobody's building, we're going to flip back to a massive housing shortage again. Toronto's population will grow again, I'm sure. People will need places to live, and there will be nothing new coming to the market. That's actually what could eventually bail a lot of these investors out. But it doesn't help the people who are bleeding $2,000 a month right now. So look, if you're an investor sitting in this situation right now, here's my honest take. Option 1 is sell now and stop the bleeding. Yes, you might take a loss, but sometimes cutting your losses is the smartest financial decisions you can make. Every month you hold, you're losing cash. If the math doesn't work for you, the math doesn't work. A loss today might be smaller than the loss 2 years from now. Option two, hold, but only if you can truly afford it, not sort of afford it, not I'll figure it out. If you have the cash reserve to absorb the negative cash flow for another 2 to 3 years and you genuinely believe in the long-term fundamentals of the market, which honestly, it's still there, then you hold. But you have to be honest with yourself about whether you can actually sustain $1,000, $1,500, $2,000 a month for the next 3 years. Option three, restructure. Maybe that means converting the property to your principal residence. You know, some people move in. Maybe it needs refinancing. Maybe it means looking at moving your investment into a different asset class that actually cash flows. Whatever it is, being proactive beats sitting and hoping. If you're not sure which category you fall into, or you just want someone to look at your specific situation and give you an honest answers, that's what I literally do. Reach out, let's talk, and if you found this video helpful, subscribe, share it with somebody who needs to hear this. There are a lot of investors out there right now who don't fully understand what they're sitting in. Let's get the information out there, and I'll see you on the next one.